It's a very, very small pool of private investors in Australia who are prepared to invest in film. If we look back at the proportion of private investment that was in film projects 20 years ago compared to today, it's dropped from around 20% of the overall financing plans down to about 2 or 3%. They want to understand really clearly how that money is going to flow back to them and at what point and how long it's going to take, as well as what the risks associated with that are going to be. And I think that's a real struggle for many producers, is to be able to articulate that, because they simply don't know the maths themselves. We can learn a lot from looking at how investors like to be pitched to and try to adapt how we go about talking to investors, so the materials we're putting forward to them are more familiar and it's not going to scare them off immediately.
Welcome to We Interrupt This Broadcast, your weekly deep dive into the Australian screen industry. I'm Kirsty Stark, and this week's guest is Ian Murray from 113 Partners, a strategic advisor to film, television, and creative businesses, all the way from independent production companies through to established companies looking for international opportunities. So welcome, Ian.
Thank you so much. Thank you for having me.
So you've been around the business side of the film industry for many, many years. And for those of us like me who much prefer to stay and dabble in the creative side, you're a bit of a lifeline and help people put structure and financing and opportunities around their business. So I'd love to know, what is 113 Partners and what are some of the things that you do to help us creatives?
It's a really tricky thing to actually answer, because 113, what it started off as and what it's become, are quite different things. So when we started off, we thought we were going to be fractional COO, CFO teams for film and television production companies. Originally, we were working very directly with clients, whereas now we often work on behalf of government agencies who are then getting us to work with film and television companies. And that's shifted the way in which we engage with people a little bit. So we're not necessarily trying to get direct engagements from clients. We're more interested in trying to work more broadly with the industry and working with cohorts of participants in programs and things like that, which I think is good, because you then get that peer interaction between people working in the industry, which perhaps you don't get when you're just working one-on-one with clients. But we still do that one-on-one work with clients as well. The main reason people would engage with this was because they're trying to figure out what their strategic direction is. So it's not necessarily to solve a specific problem, it's to try to figure out at a broader level where they're taking a business and what the intent is for the long-term life of that business, or the exit strategy for that business, if there is one. It's not always around an exit strategy. Sometimes it's around just making a business more commercially sustainable. That is a sort of recurring theme with what we're working on, because it does tend to factor into any of the conversations we're having, regardless of what the ultimate outcome for the business is going to be, is that we want to try to make sure that a business has got financial sustainability at its core, that it's something which can year on year continue to make a return for its investors and stakeholders, be it the individual who started the business, or if they have got external stakeholders, those people as well. And, the great thing about, if you're trying to build a business to an exit strategy, like a trade sale or something, is that at its core, you still want to have a business which you can demonstrate has got that financial sustainability and viability over the long term. So regardless of what the outcome is, we're still trying to use the same methodology within the business, or same set of underlying principles of driving businesses towards being financially sustainable.
And that's a challenge, especially in an industry like ours, where often people are thinking project to project rather than thinking about the sustainability of their business as a whole.
That's the biggest mind shift that we need to try to enact when we're working with our clients, is to move away from the mentality of, I'm a project manager that works on a bunch of sequential projects, to, I'm a business owner that happens to make film and television as one of the outputs of what it is that we're creating. And when I say one of the outputs, that's because it's very, very rare to come across a production company which is completely sustainable just on film and television revenues. They generally will always have something else in the mix which enables them to be able to have a little bit of additional stability from a financial perspective to what their business is generating, be that providing professional services to other people in the industry, subbing themselves out as an EP or a producer or a writer or as a director or whatever their core skill set is, or doing service provision work for inbound projects, or having elements of the business which actually have direct to consumer monetization models as well. So, where they're treating the IP that they're creating in a film and television sense, and then figuring out ways of then engaging directly with the fans or the communities around that content to then be able to directly monetize and drive value from the IP they're creating. So, as a general rule, businesses which are more successful over a longer period of time and more financially sustainable are the ones who have got multiple revenue streams associated with their core business. So it's not just a one-trick pony, that they actually have figured out other ways of being able to sustain those revenue streams above and beyond just film and television production.
Yeah, it's a lot to think about.
Yeah, it is, and it's but it's a tricky thing. You have to sort of stop thinking about project by project and start thinking about the overall business, and then looking at that over maybe 4 or 5 years and going, what are we growing to, and how are we going to get there, and are the decisions we're making about what we're doing with the business in the short term aligned with those longer term ambitions for where we're trying to take it. And if they're not, making that hard decision to perhaps not do that short term activity, even though there may be an immediate sugar hit from being able to do that financially or in other ways, um, but trying to actually align your activities to those longer term ambitions and goals for your business.
Mm. Well, what I wanted to get you on to talk about today specifically is private finance. It plays a big part, I think, not only in getting projects across the line and getting them made, because there's so often a gap in the finance plan, but I'd also love to talk about how it speaks to that long-term company sustainability that you've been talking about. So let's take us right back to basics. What is private finance? What are the various forms of it? And which ones should we be thinking about as film or television producers?
There are lots of different forms of private finance. The first one, I suppose, to touch on is the idea of bringing a private investor into your business in the way that any other small business or entrepreneur may want to engage with investors to help grow their business and to achieve some sort of long-term financial sustainability. If you're going to do that with a film and television business, you really can't be thinking about yourself as a project manager going from project to projects, because that simply doesn't work for a private investor. A private investor coming in to a business where you're really just talking about the next opportunity, and that one opportunity, they're not really coming into your business at all. They're just coming into that particular project. So, so if you are bringing somebody into your business, you need to really think about it as a business partnership. You're really thinking about it as more of a long-term relationship and a marriage that you're entering into with somebody in that instance, where they're going to be with you for the long haul, and they're not going to simply be interested in the individual projects that you're working on right now. They're looking at the holistic business and how it can actually provide a return for them over the long term, which is, again, aligned back to this idea of financial sustainability. If you can genuinely build a business which has got financial sustainability, then you're an attractive type of investment for a private investor to come and want to align themselves with or put money in. But a private investor in that instance is really looking to compare, if they're going to invest in your business, how they're going to get a return on that capital they're deploying, compared to if they were to invest that money into a different type of investment, be that a term deposit or putting it into equities markets or investing in another small startup business elsewhere. So you need to be able to convince them that there is a potential for them to get a return on that money, and the timeframes that that's likely to occur within, and ideally the quantum of what that might look like at what point in the future. Now, of course, that's incredibly hard with film and television businesses because we don't have certainty over the longer term of when projects are going to get greenlit or not. And that's where having multiple revenue streams associated with your business and having a way of being able to talk to investors about how you're going to overcome that uncertainty is something which you sort of need to have a clear plan around. And that's really, what a lot of our strategic planning work is around, is helping people to sort of try to get a little bit of a sense of what that future might look like, given the level of uncertainty which is endemic across the whole industry. So yeah, private investors firstly might come into invest in a business as a stakeholder directly in that business. They're becoming a shareholder in your production company, and they're looking to benefit from the long-term returns that they're going to get from all of the projects that you're working on, not just at an individual level.
And how does that differ from slate financing, which is a term we hear come up a lot in the industry of people essentially diversifying their risk across a slate of projects rather than investing in just one?
So sometimes it's the same thing. Sometimes, when an investor is looking at investing into a production company, they're doing it because they are looking to invest across the slate, and instead of coming into individual projects at a development level, that they're choosing to do that by investing in the parent company, which then gives them that trickle down effect to be able to invest across the slate. But there is also the idea of being able to provide development funds or a development loan across a slate of projects as well. Now, this is something which a lot of our clients have dabbled with and tried to come up with models which make sense. But of course, the difficulty with development financing is it's one of the highest risk types of financing which an investor might want to engage in, and it's still got a relatively low sort of return. So if an investor is going to come in, put money into a range of 4 or 5 different projects in a slate specifically, and cross collateralize that investment so that if one of them gets up, that they've got the ability to be able to then get a return from that investment across all of those different projects. That sounds great in theory, but the actual way in which it plays out in practice oftentimes just doesn't actually provide those sorts of returns to investors that they want, because you need to have a fairly high success rate in terms of conversion of those development projects into actual production in order to ever be able to genuinely provide that return back to the investor. So what often happens then is that they're then gifted, instead of getting the direct return on the development funds they're investing, they're given an equity position in the projects that do get up, which may be commensurate with what their overall investment was to begin with. Again, that sounds great, but you need to then understand what the returns are going to be from those projects and the timeframes you're going to take to get those returns back. Development funding in particular can be, problematic for investors, because even getting a 20% return on their money, if it's taking 4 or 5 years to get that money back, they're effectively getting a 4 to 5% return. And again, at that point, it's not particularly attractive, especially for something which is such a high risk. Generally, if we are seeing people looking at development or slate funding, they're more likely to look at it from the perspective of, what if I was to take a stake in the overall business and allow me to participate at that level, rather than just doing it into a number of 5 or 6 different projects, which still have a individual low chance of success of actually getting greenlit and going through into production. So that's sort of, at the sort of the company level or at the slate level. The other way in which private investors come into the film and television industry is at an individual project level. And that's what we probably see most commonly when investors are coming in. And then specifically, it tends to be more in the film side of the sector rather than the television side of the sector. If we're looking at finance plans and where there is an opportunity for investors to actually play a part in financing projects, it tends to be more on the film side of things. And also, it's easier to demonstrate to an investor how there may be an opportunity for a return from a film project, where it can be much harder to do from a television project, just because of the nature of how the future cash flows associated with that piece of IP are likely to actually flow. If an investor is interested in investing in a business which has got more of a focus on television, they're probably more likely to come in at that corporate level as an actual investor in the production company, rather than at an individual piece of IP or an individual television project. So when we're talking about individual projects, probably more we're focused on film projects and things which are going to have a theatrical release and which have got an ability to provide returns both in a domestic marketplace and an international marketplace.
So if we narrow the conversation to that individual project feature film investment, why is private investment so important in the Australian landscape right now? What's the big picture view?
Well, I think it's always been important in the film landscape, unlike a television project where you're getting most of your financing from the commissioner and perhaps from other distribution advances. There's a need almost always in feature films to find some other sources of capital which are going to help round out the overall finance plan. And so there's a real need for private investment into those finance plans in order for a project to actually be able to go ahead. Over the last 20 years, the number of private investors who are investing in feature films has actually declined significantly. And so people are trying harder than ever to actually find access to people who may be interested in investing in those types of projects. It's a very, very small pool of private investors in Australia who are prepared to invest in film. There's three key components as to why it's problematic for investors to engage in investing in private level in feature films. So the first one is that there's a lack of awareness of film as an investment category or as an asset class. So when investors considering putting money into a range of different investments, film generally doesn't feature highly in their consideration set. That's different from how it was prior to the producer offset back in the 10BA days, where every private investment, every high net worth accountant, every investment advisor out there around Australia would be talking to high net worths and talking to them about, have you thought about putting money into a feature film, because of the way in which the mechanisms which allowed them to actually get a return or a deduction for that investment. And when we shifted away from that model to producer offset, which was a necessary change because of the way in which people were taking advantage of the 10BA system, it meant that we simply didn't feature in the same consideration set, and accountants and financial advisors simply weren't putting it forward for investors. So the opportunities for investors to actually be exposed to the idea of investing in a film suddenly disappeared pretty quickly. So if we look back at the proportion of private investment that was in film projects 20 years ago compared to today, it's dropped from around 20% of the overall financing plans down to about 2 or 3% today. So it's been a really significant decline over a 20-year period. So that's the first point, is that today, even talking to investors, they're just not really aware of the idea of being able to invest in film or television as an opportunity to invest. The second thing is that if they are interested in investing in a film or television project, or a film project in particular, there's very limited resources for them to understand how to do that and what it means, and that the film industry overall is quite opaque to investors. They don't necessarily know how to engage with the industry. The way in which film finances actually work in practice are quite different from other investments which an investor is likely to make. There's no simple way for an investor to be able to invest in a film project in the way that they might want to invest in a tech startup. So if they're interested in investing in a SaaS platform, and the entrepreneur who was pitching that project to them gave them the whole pitch and said, here's what it is that we're looking for, here's how much money we're looking to raise, here's how we anticipate there's going to be a return to you in the future. Would you like to invest? This is how much money we need. If the investor's interested, they'll almost certainly sign a safe note, which is a simple agreement for future equity, which is a very simple document, maybe 4 or 5 pages long, which gives them a certainty around the ability to convert that investment into an equity position in that business at a point in the future when they agree on what the value of that company is going to be, maybe 12 months down the track or something like that. There's simply no analog for that in the film and television industry. So if an investor is going to come and invest in a film project, there's probably going to be somewhere between 30 and 40 legal agreements that they're going to be exposed to. Some of them are incredibly dense and not easy to navigate, and they're going to need to have a very specialist set of legal advisors around that to help them to navigate all of that. And that's going to cost them probably $20,000 or $30,000 by itself, having that engagement. So it's quite an impenetrable sort of environment for an investor to get involved in the first instance. So being able to provide resources for investors to be able to navigate and understand that, I think, is a really critical thing which we need to be working on as well, helping them to have access to a range of resources and tools to be able to translate the words that they're hearing from the film industry into terms which they actually understand, and understanding also the flow of how revenues work from film projects through to investors, for instance. And that's a really critical piece too, because the way in which investment monies flow into and out of film projects is quite unlike most other asset classes. I mean, waterfall itself is a term which, we're familiar with using in the film and television industry, and it kind of makes a little bit of sense to an investor, but not really until you actually can sit down and talk it through with them all the way through from how cash flows actually work within film and television, from the moment that a moviegoer walks into a cinema and pays for their ticket through to funds actually coming back, and who participates in that, and who sits ahead of whom within that waterfall, and what that looks like, and then the various percentages, and those types of things, which aren't straightforward. There isn't an obvious comparison in other investment classes where they can sort of look at it and go, oh, it's like blah. It is quite quite a complicated sort of process. And then there are very specific nuances around the film and television industry, which simply don't exist in other places as well. So the how profits flow compared to other projects, is different as well. So if you're saying to an investor, for instance, that you're going to invest in that tech company and they are going to buy 10% of that business, their expectation is that they're going to get 10% of the profits which flow from that business. Whereas in film and television, or in a film project, if we ever get to the point that they're going to actually have a profit, they need to be aware that producers are going to take 50% of that profit, and then their share of that of their equity in that project will be diluted by 50% straight away. So buying 10% of the business in that model only actually nets them a 5% return at a profit level. So understanding that from the outset and explaining why that's the case is critically important as well as positions in waterfalls, and first preference, and having the ability to take a premium out ahead of people and things like that. They're all positive things to help, to protect investors and to make their lives better when it comes to investing in these projects. But again, there's few analogs to it in other investment classes. And so there's a huge amount of education which needs to go on for investors to be able to get their heads around what it actually means to invest in a film project. So they're the first two things. The third thing then is that one of the other things that changed when we switched from 10BA to producer offset was there was a bunch of changes to the Tax Act effectively which occurred. That's how the producer offset and the PDV and the location offsets are all actually sit within the Australian Tax Act. And the way in which investors actually can take a deduction on their investment fundamentally changed when we switched from 10BA to producer offset as well. And so it's can be problematic for some investors in that they can only take a capital loss from an investment in a film project against a capital gain. They can't take their deductions on their income accounts in the way that they used to be able to under 10BA, and they can't do an immediate write-off of that asset investment if there is a deductibility component which they want to take, because they're not that they don't believe they're going to get that future economic benefit from the asset. As a general rule, they'll be writing that off over 5 years. So it can again be problematic for them in terms of how the tax treatment of that investment works compared to some of the other investments which they might be doing as well. So we've got three elements to sort of deal with there. Considering film as an investment class to begin with, understanding the mechanisms of how film investment actually works, because it's complicated, and then the legislative environment around how they can actually then get the benefits from that investment down the track. All three of those are have got elements of it which don't necessarily meet the nice easy pathway that investors are used to with some of the other investment classes that they have available at their disposal. So we're kind of pushing uphill on all three of them, and we need to sort of have solutions around all three of those for how we're going to be able to work with investors better in the future.
Even that for a producer can sound overwhelming in itself, just trying to get our own heads around how that all works, but then taking the information and trying to on-sell the opportunity to an investor when it feels like we're behind the eight ball to start with, compared to all of the other opportunities that are out there to invest their money. What's the positive side? What's the message that you would go out with if you were trying to sell the opportunity of investing in a film?
Look, the great news about film is that it's a really sexy investment. It's when you're buying into a SaaS platform, yeah, you may not even understand what it does from an investor perspective, because you're probably trying to solve a very specific problem, or the person you're investing in is trying to solve a very specific problem, and they've got a very niche audience, and they're solving that problem in a very unique way and hoping that people want to engage with it. And that's great. But you don't get to turn up to a red carpet. You don't get to meet the star of the show. You don't get to turn up to a film set and actually see things being made. You don't get to have all of those other fun things, that you get to have in show business and in the entertainment industry. It's called the entertainment industry for a reason, because it's entertaining. And unlike the tech sector, there are real opportunities to be able to get people excited about film in particular as a way in which they can get more than the benefit of just the purely economic benefit. So there's also three different types of investors that we think about when we sort of compartmentalize investment types, and there's always bleed between these three. It's not like a one size fits all, but in terms of trying to think about in types of investors, we think about it generally in these three different classifications. Firstly, there's your purely commercial investors, people who are looking to get a return on their money. If they're going to put $100,000 in, they want to make sure that they're getting their money back in a timely fashion with a decent premium. And so it's going to be comparable to other things they're putting their money into. So people who are putting their money in and looking to get a commercial return. The second type of investor is somebody who's looking to more affect some sort of social change. So impact investors, for the want of a title for them. And these are people who are probably interested in some sort of commercial return, but as much as that, they're also looking to see some sort of societal or behavioral change in audiences as a consequence of engaging with a particular piece of film which has been created. They're not necessarily looking for the same sort of commercial returns as what a commercial investor is looking for. They would still like to get a commercial return, and ideally you're providing something for them which would actually give them the ability to get their money back over time. But they're not purely looking at it from just a nuts and bolts dollar value type of transactional perspective. They're looking at the broader value which has been created societally or behaviorally as a consequence of investing in that particular project. And the third type of investor, and they're not actually an investor at all, is philanthropists who are then donating money towards projects, and they're not actually getting a commercial return at all. They're generally donating funds via way of a DGR registered entity, which means they get full deductibility on that donation that they're putting in. But as a consequence of that, they're not actually allowed to participate in the commercial returns from those projects. And so they're putting money into projects where they feel that, if by not supporting that particular film, that it wouldn't get made, and that it's a story which needs to be told. So there's some sort of cultural benefit from it, or some sort of longer term societal benefit from telling the story. So we have those three different categories of investors, and they do have different priorities. Any given investor will probably have some sort of blend between those three of what they're trying to achieve. But it's not just about trying to get money back from commercial investment, because if they were seriously looking at that as their primary focus, it would be unlikely that film would give them that in isolation. They would probably be able to find safer investments elsewhere, but which wouldn't be as interesting and exciting. And as I say, they're not going to get invited along to a premiere on a red carpet and be able to shake hands with a celebrity or a star from a show if they go down that route. So there's a lot to be said for being able to have the excitement of the film industry, as a selling point for investors.
What's the best stage of production to come in and make that pitch? So if we're putting our finance plan together, are there elements that investors would want to see in place before they come on board, or does it depend on the investor and the type of project?
I think you can talk to investors fairly early in the piece. I think the elements that you need to be most clear about are really the audience. So who is this for? And what's that size of audience, and what does that mean in terms of the opportunity for this project to actually go out there and to find that audience and be able to convert them to customers who are going to put money into the top of that funnel. So I think if you've got that piece first, I think that's critically important. The other pieces that they're going to be looking at understanding is the team who are delivering the project. So, have you got the people around you who can actually deliver that project? What have they worked on in the past? Instilling that confidence that, that the team that you've built are the ones who can actually deliver both the product which you're saying you're going to build, and also, find that audience that you're hoping to monetize. And then I think the third piece, is having at least a sense of what the composition of the investors in the project are likely to look like. being honest that these things can change, but being able to at least show, here's how I understand at the moment that the finance plan's likely to look like, and who's going to be involved, and then being able to take them through some scenarios and what that means for them in terms of being able to get a return. So you don't need to have a fully, finished project and they're coming in at the 11th hour to sort of just finalize that very last piece of financing in the project. You can talk to them earlier in the piece. You're not asking them to put money in straight away anyway. So, that they do acknowledge that, that they'll need to put their funds in before you go into production. They'll probably need to put all their money into an escrow account in full so that, that the thing can go ahead. And again, being clear with people about what that looks like and the timing of those things is critically important. Um, but yeah, you don't need to have a completely finished, perfectly formed package in order to be able to have those conversations with investors. You can get them excited about a project. If it's a great story and an obvious audience and a great team that you're pulling together, you can have those conversations fairly early in the piece.
And do you find that they'll want to look at the creative and read scripts and be involved in that side of things? Or does it depend on which of those three archetypes they might be?
It depends on how familiar they are with film as an actual art form. Look, you absolutely want to offer that to them. So they'd love to read a script. They might not understand how to read it particularly, but they're going to have an interest in doing so. The key thing is really that you want to tell them a story. I mean, like the great thing about our industry is that we are storytellers. Take them on that journey and get them excited about and get them to tear up or get them to feel something as a consequence of hearing that story, and if you can do that, that's half the battle. I mean, the rest of it is, is then, execution, delivery, and so on, which is kind of out of their hands. But if they really believe in the story you're trying to tell, and they can see that there's a clear pathway to an audience who's going to want to also hear that story, then that's a huge part of your job done. So really lean into that storytelling element of your skill set when you're coming to pitching to investors, and get them excited about what it is that you're trying to create.
And in terms of that journey with an investor from building a relationship through to having the money in the bank account, what do you think is a reasonable time frame for producers to be aiming towards?
Look, there's anybody who's ever made a feature film knows that there's no certainty around the timeframes involved in it, and it's going to take longer than what you think it's going to. I think that the critical piece when you're talking to investors is being honest about that and upfront and saying, look, this ideally is going to be a journey which is going to take 6 to 12 months, probably closer to 12, but this may take 2 or 3 years to be able to pull all these different pieces together because there are so many different moving parts. Even if you manage to get everything else together, the availability of a critical cast member may simply not be there for until another window or so on. And being able to articulate that you've got an ideal time frame that it's going to occur within, but there may be slippage on that front, or there probably will be slippage across different components of it, and that it's unlikely to ever go directly to plan. But to give a sense of how long it might be, I think as long as you're being upfront and honest with investors from the outset, then that's fine. If they've got capital to invest today, they're going to have capital to invest in a year's time, ideally.
And is there a way that we can easily find these people? If we don't have rich parents with strong networks, is there a database? Is there a particular type of event that they might be at? Is there a network where you can ask around and find out who might be interested in hearing of these opportunities that exist to invest?
Look, investors do tend to congregate into groups a little bit. You do have individual investors as well, and I think unfortunately for film and television, it tends to be individual investors rather than people coming in the syndicate type of environment. That being said, I think that there are a whole bunch of untapped opportunities around private investment in Australia, which production companies could be trying to tap into a little bit more. Angel investor groups, for instance, every single city around Australia has got an angel investor group, and they are a group of individuals who are coming together and evaluating opportunities to put their money into a range of different businesses, and will sometimes collectively invest into projects or into businesses. Generally, it is into businesses, um, and they're looking to sort of get a return from that investment into those projects. But it's pretty rare to see somebody turn up to an angel investor meeting with a film project. And, maybe that's one place where we should be thinking about, pitching things more frequently. the thing about angel investors is that, they are looking for a return on their money, but they're also quite pragmatic, and they understand that probably two or three projects they invest in, or two or three businesses they invest in, aren't going to go anywhere. Maybe four or five businesses which they invest in will kind of do a mediocre job, and they might get a little bit of return on it. But they're really hoping for one or two projects or businesses they're investing in to do incredibly well. Now, it's not dissimilar to the film industry in that perspective. I mean, it would be nice to think that it was 1 in 10 projects in the film industry that did incredibly well. I think it's probably a slightly lower number than that. But it's the same sort of principle of investing, is they're taking a portfolio approach to diversifying their investments over a range of small businesses to try to get that return. So, yeah, I think that, angel investing groups would be one obvious place that we could be trying to at least cut our teeth in getting used to talking to investors. The other thing about investors is that they have a very specific way in which they like to be pitched to now. So, over the last couple of decades, especially with the growth of the tech sector, there are a number of kind of formats when it comes to pitch docs that investors expect to see, and they're not necessarily the way in which film producers will pitch to an investor. I think that we can learn a lot from looking at how investors like to be pitched to, and try to adapt how we go about talking to investors to be more familiar, so the materials we're putting forward to them are more familiar and not going to scare them off immediately. So if it's in a format which at least they recognize, and it's talking in a way which addresses the primary concerns or the primary sets of information they're looking to understand about an investment, we're putting ourselves on a more even comparison, to some of the other investment opportunities they might have. But the short answer to is there a forum to go out there and to be able to pitch to large investors? No, there isn't at the moment. It's something which I'd love to see get created, and I think that in order to be able to get there, we need to really have solved that middle piece of the puzzle, which is around giving the resources to investors to be able to evaluate those projects, if we are going to be able to pitch to them. So I think, once we can get that middle piece right of having a suite of resources available to investors to be able to refer back to understand the industry better, then we can start working on that first piece of how do we actually then go out there and create these forums to be able to bring producers and investors together in a way which can actually give opportunities for producers to be able to pitch directly to a group of investors. Not dissimilar to what Ian Darling used to do with Shark Island and with Good Pitch, but that was very much in a philanthropic environment. Trying to do something similar to that in a commercial environment, I think, would be the obvious way of starting to be able to bring those two communities together a little bit more. And as I say, I think there's good opportunities to be able to do that because we have got all the sexiness of the entertainment industry behind us. But one of the things which I will just sort of dwell on when it comes to that ability to sort of bring private investors in, and I know Deanne Weir talks about this a bit, is that we are at this very interesting point in history where we are about to have a very significant intergenerational wealth transfer occur between boomers down to Gen X and millennials and beyond. And I think when that happens, we're going to end up with a bunch of new investors, people who've never had capital to invest before, looking at what they can do with that money. And I think at that point, being an opportunity for them to be able to invest in and being in their awareness and their consideration set for where they're going to deploy that capital is critically important for the industry, because if we don't do it, other industries are going to be putting their hand up and trying to soak up that money. And I think also we've probably got a change in mentality with that new set of investors who are coming through, that they're not purely looking for commercial returns. I think increasingly they are looking at what are the other elements of value which can be created from an investment into a piece of IP, which isn't simply around the commercial returns, but potentially is going to provide some of that societal or behavioral changes which they'd like to see sort of occur as well. And so that hybrid commercial impact investor, I think, is going to be more of a emerging investor type, which we'll be able to engage with. And I think that's probably a type of investor that we suits investment in film quite well.
I want to double back on the story that we tell investors through pitch documents. And having dabbled a little bit in the startup world, I guess the structure of a pitch deck is often around what's the problem, what's the solution, who is your customer, what's the addressable market you have for this opportunity, which essentially means how many people are going to pay for this. And I think sometimes there's a bit of a disconnect in film and TV where a lot of our transactions are more business to business, like we're selling to a distributor or an exhibitor or a sales agent or a streamer, and we're not thinking about our end audience. Do you think that's a shift that needs to start happening in order to be able to more convincingly address the private investors' questions about who's this for and how am I going to make a profit?
Absolutely. No, I think that's a really critical piece of that mindset shift that needs to occur as well. Look, we hear it all the time from every industry forum we go to that, we need to be thinking about audiences first and we need to be, aware of who this is for. But from a commercial investor's perspective, if you can't answer that question, they're not going to be wanting to invest in your project. If they can't understand who you're making the content for and they can't connect the dots in their mind between an audience who's actually going to put their hand in their pocket and buy a ticket to go and see that movie, and that it will then be the top of that trickle of money which is going to ultimately flow down to them, then they're not going to want to invest in it, because any other investment document they're looking at is specifically looking at who is the target audience for this, who is the target market we're trying to approach, what are the monetization models which we're using to actually convert those customers into revenue, and then what are the costs and the other expenses which come out before it flows down to you as an investor. It's exactly the same maths as what a private investor is looking for when they're looking at a film project. But we need to start with who is the customer, which is really the same answer as who is the audience. So we need to be really, really clear on that, because if we can't convince an investor that that makes sense and it's a good logical story between there's an opportunity to be able to go and monetize that particular audience and to get them to part with their hard-earned cash in order to engage with this piece of content, then then there's no pathway for them to get their return on their money. So I think that we absolutely need to think about that as a primary, you know, the very first starting point for when we're pulling together a pitch is who is this for and why does that make sense? But I think the other components there are, how are you actually going to give a return to your investor as well? They want to understand really clearly how that money is going to flow back to them and at what point and how long it's going to take, and those other components as well as what the risks associated with that are going to be. And I think that's a real struggle for many producers, is to be able to articulate that, because they simply don't know the maths themselves. If you sat down with many producers and say, if I do $100,000 at the box office in Australia, what is the actual deductions which come out of that before any of this starts to flow through to private investors? Unfortunately, I think very few people would be able to actually confidently give you an answer to be able to step through what that looks like. And I think that's a missing piece of knowledge that we really need to develop much more fully in order to be able to engage with investors. Because if you fumble that piece of the pitch, then again you've lost that investor. They're not going to want to put money into something which they're not getting a confident response, compared to, as I say, the tech startup down the road who can give that answer really, really clearly to them. So we need to be much, much more financially literate when it comes to explaining the flow of funds back to investors in order to be able to build their confidence and give them the confidence to actually invest in our projects.
Yeah, it's like the number one rule of Shark Tank, right? You've got to know your numbers or you get kicked out straight away.
Absolutely, yeah. And I think, unfortunately, it is a complicated process, and it's not something which people learn easily. There's very few courses you can sort of go off to do to understand how a finance waterfall works in Australia anyway. So having access to tools and resources which actually help producers to be able to understand that and to step through and to understand each of those steps in their own mind before then being able to then articulate that to an investor. I think they're the sorts of things which are really going to fundamentally help our industry get better at talking to private investors.
And that's something I know you've been working on with Screen Australia. There was a fantastic panel at Screen Forever talking about the new private investor toolkit that you've been building. Do you want to give us a brief summary of what that is?
Absolutely. So the private investment toolkit, which we've been working on for the last 6 months or so, maybe a little bit longer, has been a really fun project we've done, and we've had all sorts of input from dozens of industry players. So we had people who were, from the finance and accounting side of the industry, the legal component of the industry, producers, from private investors, from philanthropists. So we had lots of different concurrent task forces all happening simultaneously. And then we also brought them all together to sort of talk about some of these issues. And And we're fortunate to be able to pick their brains over the course of several months and then take all that information and try to distill it down into the tools which we thought would be able to be most useful for both producers and for investors to be able to understand what it's like to invest in a film project. So there's 4 journeys that you can sort of go on when you sort of come into the toolkit. The first one as a producer is you can go on the producer journey and say, I'm a producer, and then you can sort of step through and have a look at the different components from a very early stage pitch right through to, once you've actually finished delivering a project and you're trying to re-engage with investors at the other end, and everything in between. And within each of those steps is a number of resources and tools which you can use to get more familiar with how to pitch to investors. And what we put into the pitch deck examples in that toolkit were from the feedback we were getting from the investor community, what they wanted to hear from a pitch. So it wasn't so much from hearing how producers currently pitch to investors, it was more hearing the information they wanted to hear when they were being pitched to. So there may be some elements in there which are a little bit unfamiliar to producers, but hopefully, we've put enough handholds and explanatory notes to help people to navigate that. Alongside that, as some more interactive tools as well, we have in there some very specific tools around helping people to model out what a waterfall might look like, and they can put in a lot of data around their project, even generate a finance plan, which is in the Screen Australia finance plan format, but then do some what if modeling and look at what happens if we get this sort of level of return from the domestic and international box office. You can also reverse engineer that a little bit. You can sort of put in your data and then say, what are the levels of return which I would need based around some different parameters in order to be able to return money back to investors, to be able to go to profit, to be able to pay off a gap loan, whatever the case may be. And so there's a number of different components in there that you can sort of play around with. So that's the producer journey. And then we've got those 3 investor journeys as well. So taking those 3 archetypes we talked about earlier, we can come in as a commercial investor, we can come in as an impact investor, or we can come in as a philanthropist. And then there's one journey for each of those 3 different investor types, which then steps through what to look for when they're being pitched to. Again, what it's going to feel like as you sort of move forward, and that as a project evolves and inevitably will change how it's being financed, or that things will change and have to be recalibrated as you move forward through a project, but helping to understand and navigate that through to what to expect during production, and then again helping them to understand from what a waterfall might look like, and allowing them to be able to put some data into that model. When we're talking to private investors, they don't speak the same language as the other people you're talking to in the industry. So when you're talking to a screen agency, when you're talking to a distributor, when you're talking to a sales agent, they live and breathe the film industry. So they know exactly what you're talking about. And when you're talking about a particular idea or concept or term, they know exactly what it means. When you talk about something like the idea of equity and having an equity investor in a project, what it means to us in the film industry is actually slightly different from what it means to an investor in a normal investment portfolio. And so I think there's a few terms like that we just have to be really careful about. And so you need to do a little bit more hand holding, a little bit more explanatory work to help people understand it, given the permission to ask questions and not feel like that they're idiots for not knowing what a particular term means. So really trying to build up those resources and having a toolkit that an investor can come back to at any point, and to sort of be able to click through and to refresh themselves and to understand an element which perhaps they didn't get the first or second time that they had explained to them. They can go back and do that in their own time and at their own pace, and ideally be able to have that stick as they sort of work their way through an investment journey.
I was in the room when you did the preview at Screen Forever, and there was an audible gasp when the waterfall tool came up on screen of, this is going to be amazing. It's going to be so valuable for people. So really looking forward to that being released out into the world. And thank you for all the work that you've done on it.
No, it's been such an honor being able to work on that project with such a diverse range of amazing people in the screen sector. And yeah, you'll see, and when you get into the toolkit, there's a little task force page there with all the people who are involved, and it goes for a couple of pages. There was a lot of people who fed into it and were really invaluable in pulling it together. So we're very grateful for the opportunity to be able to build that, and hopefully to, as I said, be able to build that middle set of resources which are going to then enable us to move backwards and then start to actually be able to go out there and talk to investors and say, here's a sector that you should be considering investing in, and here's a bunch of resources which can help you navigate that better. So they're not coming in and getting excited about something and then getting scared off because they simply don't know how to work their way through the process of completing that investment. And the communication element of it is probably the one thing which came out over and over again when we were talking to the private investor community who worked with us on the toolkit, is that was one element they felt was really, really lacking from producers, was that ability to consistently communicate and to stay in contact about where the project was at and to keep them updated at every step of the way through, because it was an unfamiliar process for them. So it wasn't something that they were used to, and so the need to give relevant and timely information all the way through that whole project, even when you're in the thick of it, I think is critically important to help maintain investor confidence and to make sure that they want to come back and have a good experience and invest in the next project.
And not burning bridges for others in the industry who might want to reach out to them as well.
Absolutely. We have to sort of consider ourselves as being an ambassador for the whole industry, and we want to make sure that they're getting a good experience from it so that they do want to tell their friends and encourage people to come back and continue to invest and support the sector. Because if we can get that right, then we can create a really healthy ecosystem where we are providing a good flow of returns for investors, and hopefully they're supporting us to be able to tell great stories and to be able to find really great projects which are going to work both domestically and abroad, and strengthen the overall sector.
We ask all of our guests on the podcast the same final question, which is, what's the big idea you have to shape the future of the Australian screen industry? Ian, do you have a big idea?
Well, I think you touched on it earlier, to be honest. It was the idea of being able to actually have a forum where we can bring together private investors and producers and have a regular set of events where those two communities come together. Producers actually have an opportunity to pitch their ideas to people who have got money, and have investors a clear pathway to be able to find great stories in a relatively safe environment, where it's people who have done the hard work and have been vetted to an extent, and have a range of different stories which they might want to actually put their money behind. So I think that would be a really great sort of outcome if we can finally get to that point within the industry where we can bring those two groups together much more regularly on an informal basis. Then I think that could be tremendously useful for us as an overall industry.
Absolutely agree. Sounds amazing. Thanks so much for being on the podcast.
Thank you.
We Interrupt This broadcast is recorded on the unceded lands of the
Gadigal people of the Eora Nation,
the Turrbal and Yagara people,
the Yugambeh language people,
and the Kaurna people of the Adelaide Plains, and we acknowledge them as the traditional custodians and first storytellers of these regions.
always was, always will be.